Good morning, everybody, and welcome to the Daily Energy Markets podcast. A belated happy Easter weekend to all those celebrating those events. We have Brent crude oil trading down this morning after a significant climb up through the 60s last week. Brent is down nearly 1.5%, just above $67 a barrel. Omar Najia, head of trading at BB Energy. Omar, your thoughts on what is giving this oil market direction at the moment? Has it sort of found a North Star after the turbulence of the last few weeks going into the Easter break?
No, nothing is found. Nothing is found the North Star basically, because stuff changes minute by minute, if not hour by hour. So no. So I think basically people get excited, like okay, 60s and here we go and whatever. So to put it into perspective, the market got crushed down to $55 basis TI. And basically, it was like like those WW wrestling things. When you pick up somebody and you slam him, and then basically he bounced up. And he went like from 55 to 63. Off the canvas a little bit, and they're like, look, 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 he's just going to bounce up again. So I honestly think that we're going to basically slam this market again. I don't see any kind of respite to do with China and the tariffs. And if you see the Japanese left the US with no deal, and Trump was saying like, it's beautiful and there's a deal and all this kind of stuff. So that's why the markets are selling off this morning. So uncertainty is still there. And when you have uncertainty, you have weakness. And when you have weakness, you have weak demand for oil and energy. If you look at the geopolitical kind of situation, surprise, surprise, Iran and the US are making nice towards each other, and Netanyahu saying, I will insist, blah, blah. So that tells you that that train has left. There's definitely going to be a deal. With the Russians, the US has no option except to make a deal. And it has no option with Iran except to make a deal. And if there was to be anything to do with like a war or something like that, the global markets would simply collapse. So I don't see very much that's there kind of supportive for oil, neither economically nor geopolitically. The dollar keeps weakening, and that's not people will say, yes, dollar weakens, so oil gets cheap. No, oil is cheaper than it's ever been compared to anything, compared to the dollar, compared to the price of orange juice, compared to the price of bread. It's, cheaper, so the cheapest it's been since the 1980s, but it's basically a geopolitical thing, and they want to basically weaken it because it's an input into the rest of the global economy. So I think we go considerably lower. We break that low at 55, and I think that the equity markets and the dollar weakening, and I think treasuries keep moving higher, and that's a basic massive sign of weakness of the U.S. economy and the shift of markets and the world from like this away from dollar assets. So nobody wants to hold a dollar. Nobody wants to hold treasuries. What we've been saying for a very long time, and it's all coming true. So people are buying gold and any other kind of neutral hard asset. So it's going to be interesting. But I think we have lower to go on oil.
Laurie Hitayan, MENA Director, Natural Resource Governance Institute. Laurie, sitting in Belgium, your thoughts on over the weekend? We seem to get some sense of this oil price absorbing a more bearish outlook for the Iran-US talks, i.e. Israel and Iran won't end up in a war, and also some kind of a weird ceasefire offered over Easter by Putin to Ukraine. When we look at these two conflicts, or these face-offs, or whatever its stature, obviously the war is still a war in Ukraine, and Israel is still ferociously slaughtering Palestinians in Gaza. So these are active hot wars. Has that translated into a premium in the oil price? And so with some indication that they can be resolved, that premium evaporates out of the oil price and the oil price falls. Your thoughts on where those two things go, these active conflicts and geopolitical premium in the oil price?
Ciao, Sean. Now we speak
Ciao.
Italian in Europe.
Oh, you're now a Meloni? You're a Miss Meloni?
After Meloni's
All hail Meloni. What is it? It's isn't that the Mussolini thing? It's not quite this. It's kind of this. It's
that's
that funny hat.
That's ciao, the ciao. So that's another thing
Yes.
to talk about. But just to say that I think there are like good signs and positive signs that these at least the appeasement or a kind of possible solutions, and everyone is cautiously optimistic. But the fact is, like, now more concerns about like the impact of the tariffs and what will happen after 90 days, and how it will impact the demand, the bigger issues of the economic slowdown or growth, or what will happen, the destruction in economic and in trade. All of that is getting is more preoccupying people than just hearing about like a ceasefire here as a good intention for Easter, or about like these direct negotiations that are happening in between Iran and the US. All of these are not the most important things now. People are more interested about like what will happen with Trump's decisions, and all of these like leaders talking to Trump, and what will happen after 90 days, what solutions they're going to find. Are there, like, everyone is talking about like, yes, we will find the solution. Yes, there will be agreements, but no one understands what sort of agreements there is going to be between the Americans and the rest of the world on these tariff issues. So I think that is more important than anything that is happening. And at the end of the day, everyone now knows the deal. So there are like the attacks on the Houthis is not affecting that much the prices. You see that, yes, maximum pressure on Iran. Still reading that Iran is selling to the Chinese. All of that is like already something that had been taken into account for over 2 years and more. So now everything now it revolves around what the President Trump is going to do with all these bilateral talks that is happening, all these like other talks that he's having in this during the 90 days pause of the tariff implementation. I think that's the most important factor now that everyone is looking at.
Ali Al-Rehami, consultant and former Director General of Marketing at the Ministry of Energy and Minerals in Oman. Ali, Oman has been very much in the center of the news this weekend, obviously hosting these US-Iran talks, as well as the Sultan of Oman was a guest, a state visit to Holland, and is today apparently going to visit with Putin in Russia. What can you tell us? What's your assessment of these Iran-US talks that Oman is hosting? Is the mood music positive? There does seem to be some sense of urgency on these talks, that there is unlike when there was the Obama-Iran P5 talks or whatever they were called at the time 10 years ago. They went on for 2 years. Now it looks like there's something urgent and they need to be over in weeks. Your thoughts on where Oman's hosting of these talks and the outlook for them?
Yeah, I mean, good morning, Sean, and you are right. I mean, we can see that this time everybody is in a rush to get into an agreement, not like before. But this is a positive indication. I think Oman is playing a very big, nice, and good role to bring these two countries together in Oman, and then later on, later they went to Rome, and then they will be back this week for technical discussions, and hopefully after 1 week from now, maybe we can see an agreement. So this is a very fast track agreement, and if it happens, then I think it will be something that we should all celebrate and this will bring, I think, stability to the region, and it will be something that it will help the market, actually, the oil market in the future. Although maybe if you take the sanctions out of Iran, then we will see some extra barrels coming to the market. But nevertheless, we see now Iran is doing 1.7, 1.6 million barrels per day, and all of it is going to Asia. So there won't be any kind of changes to the export from Iran. I think it's just only going to be, legal rather than being illegal. So I think we hope that this agreement will be signed after 10 days from now, maybe less than that. But it is something that we should all celebrate about.
Omar, when you talk about the sort of downward draft in the oil price, 55, I think your reference there probably for WTI as a reference that we may break through that low point. What is the downward draft that pushes? Obviously, we've had this upward lift last week, a relief rally perhaps after the trauma of the Trump tariff announcements. But what is the downward draft that is pulling oil prices into, what would be, we're already, touched 4-year lows, going through 55 towards 50 on WTI would break another multi-year lows. What's the big pressure that pulls it in that direction?
Well, so basically, market instability. So you have to, in markets, to find a sustainable low, you have to have people kind of give up, right? You have to have people like throw in the towel. They call it capitulation, right? So finished, I'm done with it. We're going to zero. I don't care, blah, 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 blah. You haven't seen that yet. I don't think you've seen that on oil, and I don't think you've seen that on the S&P yet. So you need a capitulation to have like a kind of turning point. So markets in general don't like to kind of keep going sideways. At some point they need to break higher or lower. So if you think
the
about
volatility as a whole, there was a great headline in I think it was Bloomberg or the FT over the weekend, is like traders were moaning about the lack of volatility, and now they're drowning in it. Regardless of the nominal price, you guys can make lots of money in these volatile markets.
No. So that's the article was saying, you can't make lots of money in these volatile markets. That's the whole point.
Because there's too much volatility. Is that the point?
Well, no, it's basically that it's basically that it's changing too rapidly. So basically it's something that can happen. So the article was saying that, first of all, you can have 25% tariffs, which then changes into 10% and then 5% in a day. And then you can have tariffs that are on and that are off after a week, or you can have, so things that when things change like that, it's basically like it's binary as opposed to volatile. So basically it's not like, it's like alive or dead. It's not like alive, a little bit sick, a little bit healthy, that kind of thing. So that's the problem. The problem is it's way too binary. So in general, I think,
Laurie, I'm picking up on the earlier points about the outlook, optimism, outlook or not, cautiously optimistic, whatever words one wants to use on this, particularly the Iran front, the Iran, U.S., Israel triangle, if you like, U.S. negotiating on behalf of Israel or whatever one wants to describe it as. But my question to you is, obviously, Oman is hosting these talks with a limited weight to really influence their direction. But what influence does Saudi Arabia have? How big a factor you think it is that the Saudi defense minister went to Iran last week? Do the Gulf Arabs, does Saudi Arabia have the ear of Trump more or equal to Israel? Where do you think this sort of quadrangle of influences are on the outcome of these talks? Because it does look like Israel still wants to, move around back to the Stone Age.
Look, Israel, yes, first option for Israel is like to go for military. options and not the negotiations. And I'm sure they're not happy, but they're always like they're around wherever the Americans are around the negotiations, they are around looming and turning around to make sure that they are getting firsthand information and getting to know what is happening. For Saudi Arabia, it's more about like how to protect Saudi soil and not to be in the middle of all of this. They have said it many times. This is like Iran, Israel, or Iran, US issues. They don't want to be stuck in the middle or pay the price for something that they have nothing in it. So basically, Saudi Arabia going to Iran at this early stage of the negotiations, it's just to say that we have our bilateral agreements that we've done since like that agreement that had been done under the sponsored by the Chinese still holds. It's the commitment still hold about like bilateral relations with Iran. And this security now meeting is about like any military action is not like Saudi Arabia needs to be neutral, and the retaliation shouldn't happen on the Saudi soil. They cannot afford that, and this is very clear. They might want to, in any case, they would play a positive role in rapprochement between the Americans and the Iranians, but they don't want to be the victims of any kind of disagreement or any kind of when these negotiations fail. And then from what we
What
are
about influence? What about influence, though? I mean, clearly Trump has a relationship with Riyadh that Riyadh didn't have with Biden. Do you put much weight to that, or is there bigger forces at work here?
Look, they always have influence, but I'm not sure. Like, and then I would say that Saudis as well, they might prefer that the negotiation path than like a strike at this stage, I guess. So maybe that would be that the Arabs would prefer like maybe a negotiated deal and plus the bilateral deals than having to go through a military action that might destabilize the region again, and that they don't want. So at least from that side, if they are approached and asked, like, what do you prefer? I would tend that would be the preference to go there. And don't forget that, again, that opens the door about like, okay, what comes next? What are we going to do about the normalization? All of these stuff haven't gone yet. Like, it's like maybe we're not talking about it now more like about the Israeli-Saudi normalization, because these issues now with the tariff or the trade war and the Iran-US negotiations have taken like the forefront. But all of these are like on the table of every country, depending on where they're standing and what do they want. So I think that they have their preference. In due time, they might use the influence. But for now, the Saudis are just securing their soil and just making sure that anything bad that goes, it won't have an impact on the Saudis.
Ali, the other factor, of course, we're talking a lot here about the impact on the demand side, if you like, in terms of the tariffs and the wars and the impact on economic growth and so forth. But on the supply side, we have OPEC plus increasing supply now on month to month. They started in April. They're accelerating it 3 times X, or is it 4 times X in May, what they did in April. And we expect that in the next week, a decision about June and July. So, Ali, I'm wondering your thoughts on where OPEC Plus is going at this time in what appears to be a weakening economic backdrop, increasing supply, and the announcements you expect them to make for June.
Well, I'm sure, Sean, that they have their own reason of accelerating, the barrels to the market. I don't know what was the rationale behind that decision, but I think they do have some, information maybe, or inside information about how the market is reacting and how will react in the future, and that there is a demand going to happen after 2 or 3 or 5 months from now. So I'm sure that the decision was based on a solid indications, market indications. But at the moment, I don't see that. But they are going to accelerate their production and also bringing back these barrels to the market. I think the main factor here is that maybe there is a pressure inside of OPEC Plus. Countries like Kazakhstan, countries like UAE, and others, of course, but they have been waiting for this opportunity to appear a long time ago. They have been spent millions and billions of dollars to exceed their or to boost their production, and here we are now. They are ready to export, and they have this cap for OPEC Plus. So to keep everybody in the coalition and to allow the countries to export more, the decision was to go ahead and start bringing back these barrels. Are these barrels having an impact in the market? So far, we haven't seen so much of this impact. The prices who have been affected by the tariffs and also the geopoliticals more than these extra barrels from the 8 countries. So far, it's working very well. We are getting into summer, and summer always the demand is high. So the timing of that decision was good. We'll see how it goes in the future. But acceleration, that's something that it was not expected from everybody.
Let's go to the survey question, which is looking at this the geopolitical premium. How much geopolitical premium is in the current oil price from a possible Iran-Israel conflict? It's a question that we saw some diluting of the oil price this morning, based on many factors, of course, but one being that the positive noise out of the Iran-US talks. But how much geopolitical is still in the current oil price from a possible Iran-Israel conflict? And one of the things that does seem to be there all the time is indeed a urgency, that there is a time frame in which this needs to be done by, and if one was to come out with an agreement 3 weeks from Monday, would the oil price drop $5? Would it drop $3? Would it have no reaction because there really is no geopolitical risk? So that's kind of where this question is at. Omar, looking forward into the direction of travel here from the point of view of the oil price and its intersection with the tariffs, which one would have to say continues to be the dominant force in global economics. They've been there's a 10% universal tariff across the world from the US. Obviously, on China, it's some massive 150+%. But the others have been paused for 90 days. Of course, that 90 days is ticking away. How big a factor, once that passes, does that then put a floor on the oil price, that once we get through this sort of tariff trauma, that's a floor and the oil price and global economic growth can recover from there? Or are there other factors that keep this a bear market?
No, I don't think, basically. So I don't think there's a direct correlation between the oil price and tariffs or the US equity prices or anything else, or the US dollar or whatever, right? So the US dollar is dropping, oil is cheap. What's oil doing? It's dropping as well. Haha. So with all these things, I think markets kind of trade independently. But the bottom line is that the thing with Trump is what you're seeing, I think, today, is the fact that, all this stuff to do with, we have a deal with Japan, all the rest of it. The Japanese, if you read over the weekend, they were saying they were really confused because they don't even know. This is the head of the Japanese delegation saying, we couldn't understand what the Trump team wanted. We asked them, what do you want? And they couldn't answer us. So when you have this kind of confusion inside what are they trying to achieve exactly? I don't know. I don't think a lot of people know. If it's 10%, if it's so, what's the point? If you're trying to basically reshore manufacturing to the US, you can forget about it. It doesn't happen with tariffs. It takes decades. So I think the confusion
Well,
in the market is,
the declared sort of objective, as I understand it, is there's trade deficits between countries A, B, C, D, 150 countries, and the U.S. government wants to close or somehow have a pathway to reduce that deficit.
well,
So Japan, I don't know, is like 88, $90 billion deficit, and it needs to do something to close it by maybe buying more American LNG or something.
Yeah, but again, that's a fundamental reason why markets don't understand. Deficits are a spending problem, right? If you're spending too much compared to what your income is, what you're selling, then it's your problem, right? How's it my problem? Yeah, so that's what the market's trying to understand. You can't basically, and the numbers that they used for this deficit also are nonsensical, right? So the trade deficit with China is calculated at, consensus says 7.3%, and they've said no, it's actually whatever it was, 34% when they first started, right? Which is why the market had such a big overreaction. The same with the EU. It's supposedly around 5 point something percent. They came in, they said, it's actually 25%. So when you don't know what the other person, so the other person's telling you, the sky is actually green, and you can see that it's blue, and it doesn't even match anything to do with green. People get really confused, and when they get confused, they get fearful, and when they get fearful, they get negative. So now, if you have a business in the US or you have a business in Europe or Japan, you can't plan for any of this stuff because it really does depend on one guy coming out in the morning and saying, we're going to do this, we're going to do that, we're going to do whatever it is. So it's not a healthy kind of environment. It's not something that's geared for growth.
And that's unlikely to change as long as Trump's in office. So if it's the tariffs today, the turbulence, there'll be something else next week to create the turbulence, it seems. Laurie, let's get back to where we started from with your little salute there, ciao, because behind that, of course, is a serious issue, and that is, will Meloni, does Europe have a uniform position with the Trump, with the US? We're seeing that, with the face-off in America, Harvard and all the universities have finally realized they need to stand together in order to have some kind of resistance to the Trump wave. Europe clearly must realize, and the UK and Europe must realize they need to stand together. Is Meloni and Orban going to be a fracture in that? Is Meloni going to join Orban and be a fracture in the European solidarity?
First of all, just to clarify that the opening was not endorsement to any fascist movements or anything. It was just like the feeling of what's happening now after the visit. So that's, please, for everyone.
Absolutely.
So second, to say that, look, Meloni was asked, are you with the US against the EU or with the EU against the US? And definitely in a very predictable way, she said, I am for Italy. But at the same time, we have this alliance across the Atlantic, and she wants to make the West great again, and all of that stuff that she had mentioned while she was at the White House. Today, I don't think that the EU's first person of choice is Meloni to go and negotiate with President Trump, but she is maybe the only hope for them to at least start a conversation. And Meloni was in the US to try to talk. She said, I'm here to talk. Talking is already good. And she invited President Trump. She said, near future, he might visit Italy. And during that visit, there might be a meeting with the EU leaders. So this is what she tried to bring during her visit there. It was a very short visit because the next day she had to be in Italy for Easter, and then JD Vance was in Italy as well. So now the EU, they need someone to speak to President Trump. President Trump hears Meloni. So there's the kind of stuff that is happening there about EU working with Meloni, and we understood before Meloni going to the US, there was a phone call with von der Leyen about coordinating efforts. So they do understand. Meloni understands that she cannot put all her eggs into the US basket. You've seen how yes, she's friend with President Trump, but at the same time very cautious and very careful about what she says so that it doesn't go the wrong way in that press appearance. At the same time, she knows that she needs Europe. She is part of Europe, and her economy with European countries are bigger than the 10 billion that she talked about, like the Italian economy, Italian companies investing in the US. And definitely the whole idea of the LNG was put on the table. She said it, we need more LNG, we'll buy it. We can buy it from the US. And then especially that now on 6th of May, we're waiting from the Commission this plan for the phase out from the Russian gas import. So that is important. So there is a phase out that is coming, a plan from the EU Commission on gas, so LNG and pipeline. And that means that there is a gap. And who's going to fill out the gap? Is it Norway? Is it Algeria? Or is the US? And already we are at 45% on the US. So half of the LNG is coming from the US. Do they want to create that new dependency on an America that is run by Trump, that could every moment take a decision? That is all put on the table that affects Italy and it affects the EU.
Yeah,
so Meloni is the kind of trying to do all of that. And let's see if she will make it or not. Not everybody is happy in Europe that if she makes it, they're not happy, because that will give a sign that her ways are giving way. So there might be implications on the next elections whenever they are. And if she's not successful, then there is another problem, like who's going to talk on behalf of the EU, because like I don't think President Trump.
Well, ultimately, that is the job.
The EU Commission.
There's a new German chancellor to take office in the coming days. Hopefully, he will also step into a leadership role. Ali, last word to you. I wanted to get your thoughts on what kind of pressure all of this is bringing into the Gulf states. We've got the 10% tariff, we've got a $10 drop in oil price, and now we've got a 10% decline in the dollar, which of course all of our currencies in the region are pegged to. This is a difficult window fiscally for the Gulf states. What do you think about that and its impact on the decisions that it will be making in the coming months?
Well, actually, it varies between country to country. Saudi Arabia, of course, they need 80, 85, and almost like $90 per barrel to make to break even, maybe more than that. But 65 up to 70, I think, were to consider the situation at the moment. I think it is a price that acceptable. Considering the uncertainties that we have, the tariffs and also the geopolitical and so on. But of course, I mean, the countries like Saudi Arabia, Oman, everybody is on a limbo at the moment, waiting to see what is going to happen in the very near future when it comes to tariffs and also the negotiations and the discussions between the Iranis and the Americans. So I don't think that the price will be higher than what we see at the moment. Maybe it will reach up to 70 at the fourth quarter of this year, but that will bring a lot of pressure on the physical budgets for countries like Saudi Arabia, UAE, Kuwait, and others. But I think when it comes to Oman, I think we have already budgeted on the $60 per barrel. So I think anything above 60, we are laughing all the way to the banks. So it shouldn't be a big problem for Oman. But
well, let's hope it's with the dollar, the dollar weakness as well, of course, becomes a big challenge for a region that imports 90% of its requirements. So here we have $3 tick in the box as the geopolitical risk premium that could still come out of this market. Then the others also getting some thoughts. We'll wrap it up there. We've gone a little bit over time this Monday morning with Brent crude trading down 1%, a little over 1%, about $1 at 67 on Brent. We'll wait to see when the rest of the world wakes up. Some places Monday is still a bank holiday in Europe. Markets will have the low liquidity trading this today, one would think. And as everything reopens tomorrow, we get a greater sense of whether we've come through the tariff trauma of the last 2 weeks, or we're going to go back into it as the noise revs up. Ali Al-Rayami from Oman, thank you so much. Omar Najia in Dubai, thank you very much. And Laura Hitayan in Belgium, thank you so much for your insights. And we didn't even mention Lebanon. I really want to get Laurie's views on all the things that are happening there next time. All the best, guys. Have a great week. Bye-bye.
Thank you. Bye.
Thank you.
Thank you very much.
Happy Easter to all.
Happy Easter.